What is up, everybody? I'm your host, Claudio Alegre, and welcome to episode 13, season 3 of The Daily Pill, a webcast sponsored by our parent company, Angel Home Care Services, providing advice when needed and direct services to families at home right here in South Florida, specifically Dade County. So right now, while it's fresh in your mind, go to angelhomecareservices.com. There's a big red button. As soon as you get there, click it, and that's going to take you to a page download that's going to have this report, which I have somewhere around here. You know, how to have your elderly parents properly cared for without going broke in the process. In there, there's a whole 2 pages on the very topic that we're going to talk about today, which is long-term care insurance, and finally explained in simple terms by my friend and colleague Jordan Hagmeyer. Let me tell you a little bit about Jordan before I bring him in. Jordan has built a reputation for being an innovator as well as doing what's best for his clients, no matter what it takes. In just a little bit over 2 years in his career, he built a track record of success that's led to accumulated book of business of over 250 clients since 2014. And just to put that in perspective, guys, there's only two ways that you can do that, and that is to get people to trust you and to know what you're doing. Okay. With a bachelor's of science degree from the Florida State University in risk management and insurance, as well as a degree in real estate finance, Jordan is well versed in two fields that we will all deal with throughout our lives. After graduating from FSU, Jordan went on to take a full-time offer as a wealth management analyst for Morgan Stanley in their capital markets division in New York City. After a year as an analyst, he decided to take the incredible skill set that he attained while working for one of the most reputable investment banks in the world back to Miami Beach, where he would join his father's firm as managing partner of Jeff D. Hackmeyer and Associates. So when it comes to finding the right solution for the insurance needs in your life, Jeff D. Hackmeyer and Associates is the right choice for you, your family, and your business. Jordan, thank you for taking the time. Welcome, man.
Thank you. Yeah, you made me realize I have to update my bio because I have fortunately a lot more than 250 clients now. It's that's probably 5 years old. So I'm still
right.
Fortunate to be here, and thanks for having me.
No, my pleasure. I think that we this is a topic that you and I have discussed before. I'm familiar because of the nature of the business that I'm in and the type of services that we provide, where so many people get to a point in their lives where they need convalescent care, home care services at home, and unfortunately, as you well know, traditional insurance and the government is just not going to be enough, which leaves people that made a decision a while back because they were properly advised to buy or to kind of grab long-term care insurance to cover that gap, but the ones that didn't are the ones that are now in a bit of a pickle right now at this very moment. And so I think if you're in your late 40s or early 50s, if you're healthy and in your prime, I think you can't afford to ignore how to keep your money safe and far away from the clinch of a chronic health condition. But you got to know what tools to use,
Of course.
and definitely you got to know who to talk to. I know that we talk about, let's kind of like segue right into kind of like a broad question, which is in your opinion, uh, you're being out there, you're talking to a lot of people, right? How is the preparedness level when it comes to retirement and when it comes to hedging against these types of chronic health conditions in the context of the tools that are out there to hedge that? In your opinion, what's going on? What are you seeing out there?
I mean, there's really three types of people. There's ones that have experienced it with their own parents and they know that they need it. There's also people who just realize last minute, maybe they decide, hey, maybe I should look into that. They've done well financially, and it's probably something I should do to prepare. And then there's people who don't think about it until it's too late and they can't even medically qualify, or they may not be able to be in a financial position to pay for it at the time that they finally decide to pull the trigger. So, it's basically all ends of the spectrum.
Okay. So is there at what point should someone, like I'm 50, I'm going to be 52, right? But I'm not a good example because I'm in the field, so I'm totally biased, right? But at what point should someone start looking or start considering, long-term care vehicles as a serious financial tool? Would you say, mid-40s, midlife,
I mean, I think mid-40s is like the earliest I would suggest.
Okay.
The only reason I would say to look into it in your early 40s, or even your late 30s, if you really wanted to be, that quick to jump on it, is if you have a family history of some sort of illness.
Sure.
Maybe with the genetic testing going on these days, maybe that you're predisposed to have something. So, I would say the earlier the better, but 45 to 50 is, in that range is typically when people should start looking at it. Usually they're married, they've got kids, their parents may or may not be around still anymore. But that, I would say 45 and older is really when you start looking, and the average client is buying it in their 50s. The later they wait, the more expensive it becomes. So that's really the most important takeaway.
Yeah, man. I mean, being insurable, it like almost throws the age factor out, right? Because if you develop a pre-existing condition, it doesn't really matter how old you are, right? So,
exactly.
So what? So when it comes to long-term care in general, how would you start explaining that to someone who's never heard of it, and in a way that a 6-year-old could understand it? Well, how would you verbalize that in a way where they're not like, stop it, my head hurts?
Well, if it's a 6-year-old, it is, something you pay for that will help pay to take care of you if you become sick when you're older. That's it.
Isn't that what insurance is for?
Yeah, I mean, medical health insurance is, but at the same time, if you have a serious illness and you can't, perform any of the activities of daily living, if you can't bathe yourself, if you can't feed yourself, if you can't, put on clothes, if, those are just a couple of them. But, really, if you can't perform those duties, medical insurance does not pay for you to have an aid. It is very difficult to get the government to provide a stipend or to pay for somebody, let alone provide you with somebody for the hours that you might need given the situation you're in. So this is a way it's another type of insurance that pays for the unknown.
Yeah, and usually the services, just to clarify that for anyone who's listening, just generally services that are provided usually at home or at a nursing home are usually of a palliative nature or non-skilled, meaning non-clinical services like personal care, companion, homemaker, respite. It's funny because Medicare would pay for a brand new heart, but they won't pay for a bath, right?
Exactly.
Or an hour bath, it's
well,
weird.
Not at your own home. At your own home, no. Yeah, I mean, if you don't have the coverage, you will, and something happens in the same, instinct, you will end up in an ALF or a nursing home. Or living with your kids, and they'll be doing those services for you. Yep.
So definitely the right age is I tell everybody when I'm talking to families, I tell, look, as soon as you start getting those AARP, pitches, it's time to start considering that. And if you browse through AARP magazine, you see even some ads all having to do with annuities, which we're going to talk about a little bit, a little later, and how the combination of annuities and long-term care, it's a very, very powerful weapon when you deploy it right. Oh, how much of a factor? Because right now anybody can just go online and just basically, not everybody, right? But that's what they sell us, right? Everybody can just go online and buy any financial tool, right?
Of course.
how important it is to know how important it is to talk to the right person when you're trying to figure out what's the best tool for you in the context of long-term care. And if you can put a couple of scenarios there so we can see the contrast, that'll be a big help.
Yeah, for sure. I mean, I think there's a lot of things that you can Google and just buy online and be totally happy with. If you need paper towels, you can just order it on Amazon. But when it comes to buying an insurance product, I think you need to speak with a professional that evaluates your needs and what you're looking for and what you're looking to accomplish. And, ultimately you want to work with somebody, whether it's ever myself or anybody in the future, you want to work with somebody who represents every company for the type of product you're buying. So whether it's life insurance, long-term care, annuities, you want to work with somebody who does not directly represent a specific company, but rather is a middleman between all the companies out there. It's important to have the experience and have somebody who deals with it day to day explain it to you, because if you buy the wrong product and you set it and forget it and it's on Check-O-Matic monthly paying for it, but then the time comes that you actually need to use it and it's not what you had expected, it's too late. So, that's really a big point that I would say.
Okay. Jordan, can you go a little bit into the history of long-term care, what it used to be, right? Like we were talking earlier, you and I, when we were prepping for this, we were talking about, how the old timers, right? Like my parents and probably your parents, they bought the early versions of the long-term care insurance policies out there. But now I would say in the last 10 years, or maybe even less, that entire industry has revolutionized or the reproductized in a way, right?
Yeah.
How big of a deal is that, and why did it happen?
Yeah. So to give you the basics, it's really a matter of, when you look at long-term care in the past, it was created in the 80s, or probably back in the 1900s, it was created. I don't know the exact day, but when it was originally created, it was not priced correctly. So you had people paying $100 a month, $1,200 a year for 30 years, and they were buying a benefit that would increase with the cost of living. So it would increase by 3% a year. The price would stay the same, and you'd go out on claim and you'd have a lifetime benefit. So let's just say that you had $500 a day by the time that you actually went out on claim. That's $15,000 a month of tax-free money that these companies are paying out. And that's 180 grand right there, that if they collected $2 grand a year for the past 30 years, they're already in the red off of 1 year. They're on the hook for the rest for your life, for as long as you live. Historically, people live, once they are on claim, the average is about 2 to 5 years that people live once they are on long-term care. So what they've done is they've gotten rid of the lifetime benefits. They've reduced it where you can pick as many years as you want, between 2 and 6 years of benefits. And the pricing has increased dramatically. For people who had those older products, the prices have gone up 200-300% since when they bought it, but they're still less expensive than the products that exist today. So, and they're better. There's no denying that. But there are newer, more innovative things that have come out recently and allowed people to have long-term care coverage in different ways. There's a few ways that you can accomplish the same goal without buying traditional long-term care.
And by the way, when you mean by they mispriced it, are you talking about the fact that they couldn't foresee that the fact that people were living longer, they were healthier, the whole mortality rate charge just went out the window?
Yeah,
completely.
Right? And you think about it, if you're 75 years old and you have trouble bathing yourself, and maybe you can't cook for yourself, or it's tough for you to put on your clothes because your knees and your back hurt, that's 2 of the 5 activities of daily living. So, if that qualify, if you had a doctor sign off and it the claim's approved, they're paying, directly to have, they were paying to have this service, and they're going to get it. And if that person's really not that sick, it's going to last a long time. It's not going to be a year or two. It's going to be 10, 15, 20
Yeah.
years. And they didn't anticipate that. So
so today, right? Remember the old policies there were standalone policies, right? Where you like my parents bought those. My dad's 80 now. My mom's 76, right? And they bought their policies when they were my age, 52 to 55. But there were MetLife policies, right? And they were and I remember I even I have some patients and families that had the old Unum Providence, policy.
My parents have. It's the Rolls Royce of long-term care.
Yeah, right. And the John Hancocks and all of that. And those were standalone policies. If the way that he has evolved, can you still buy a standalone long-term care policy, or is it kind of like a life insurance policy with a bunch of clauses that have the benefits that you need in terms of long-term care? Can you talk a little bit about that really quick?
Yeah, so I mean, there's definitely products that are misleading where you'll buy it and you're basically paying to cover the cost of a nursing home or an ALF, versus the right products will allow you to have care at home and will allow you to stay in the comfort of your home in the case of having a claim, which is the most important thing. If something happens, you want to be at home and you want to be taken care of and you want to have the right product. Those individual policies do exist. It's just very limited and they are more expensive than they were in the past. But you can buy anywhere from 2 to 6 years worth of benefits. And depending on, just to give you a simple idea, if you're buying $10,000 a month of benefits, 120 grand a year for 2 years, that's $250,000 that you have that, when you buy the right product, if you don't have that substantial of medical needs, it can last you 5, 6 years. At the same time, if you buy a 6-year benefit for the same amount, without calculating the numbers, it's going to last you a lot longer if you have, less serious issues going on. And the reality is that if there is something serious, really serious going on, you're probably not going to make it past 5 years, as morbid as that can sound, but it is the reality. But people who have minor to I guess, minor things going on and they qualify for a benefit, it can be spread out and last a lot longer. And you can have somebody come help you to bathe once a day, and that's an hour of skilled care. You can have somebody come for another hour to make you breakfast or make you lunch. But you don't need to have somebody there for 24 hours a day.
And just to put it in perspective in terms of what you just said, the only way that the average person can qualify right now is through Medicaid. This, statewide Medicaid long-term care, programs. But you have to be Medicaid. You have to qualify for Medicaid, right? Because Medicare is only going to give you an hour if you have that skilled service like that nursing or that PT, right?
Exactly.
And that's if the agency volunteers that, because they don't get reimbursed by that directly, right? So the importance of what we're talking about is it's almost nowhere else, no other way to get it, no other way to get it back, right?
Yeah.
To get some basic 80 activities of daily living help, unless you have one of these products or these solutions, right? So there's almost no need. I've never seen. It's almost something you don't really have to sell this. Okay.
Yeah.
And,
it's something everybody wants. They don't think they need it until they need it. And ultimately it comes down to financially being able to afford it. But it's the last thought that you're ever really going to have when it comes to making a financial decision. It's the last thing on the list because you want to put it off as long as possible. Nobody wants to think about needing somebody to come help them. Nobody wants to think about not being able to stay in their home because they can't take care of themselves. And that's really what this insurance policy does. Long-term care allows you to stay in the comfort of your home when you are in retirement and things have started to go south, which is essentially inevitable for all of us. We are human.
Yeah. And if you're a Gen Xer and you're sort of like at 55, the proverbial sandwich generation where you have a parent that is going to start costing more than possibly what, you don't want to spend down your retirements either. We're going to talk about that really quick right now, but your kids are also going to college, right? So you're getting sandwiched.
Yeah.
in terms of expenses. And so this planning for someone in my age group, definitely not your age group, but in my age group, it's a must. We're going to talk quickly about annuities, and I think you laid out a beautiful strategy in terms of annuities and combination with long-term care and why that works. Explain really quick what an annuity is in case somebody doesn't know it, and why it's so important to have that annuity, almost have it set up in a way that it pays for your long-term care.
Yeah, for sure. So to make it simple, an annuity is an insurance product that you put X amount of money in, and at the time that you retire and decide to turn it on, it's an income stream. So it's the same thing how you're paying money every year to go towards Social Security, and when it comes time to retire, you plan on, collecting an income from the government, getting some of that money back. So this is just a way for you to invest in the market, and depending on the type of product, you can essentially remove all the downside of the stock market. So a lot of people have 401ks, maybe they have a couple $1,000,000 saved away after their whole career, and they say, you know what, I've got 3 million, let me take a third of it or half $1,000,000 of it and put it into a product that I know is not going to be affected by the stock market. Because if you have $1,000,000 at retirement and you plan on using that and taking 5% a year to retire, if you have one bad year, which we've all seen in our lifetimes, a couple, your money's going to run out. Your money's going to run out in less than 15 years. So if you're 65 and now you're 80 and your $1,000,000 is gone, that's where an annuity comes in, and it becomes a supplemental income where you're getting an income over and above Social Security every year. And when the stock market is tanking, which it will happen, who knows? This is the time where you use your annuity money versus taking money from the stock market portfolio. So as well, if the stock market's doing well and you want to continue to take money from your annuity, you can use that money to pay your long-term care policy. So, big thing as well to keep in mind is when you are on claim, if the day comes, hopefully you never use it. That's the idea of every insurance policy. But when the day does come that you are using it, you no longer have to pay the monthly or annual premium. So the cost goes away, and now that annuity is just supplemental income over and above your Social Security, your 401k, and your long-term care benefit. So it's just another vehicle to put money in where you're protected from the stock market and you're creating an income stream.
Okay, that's awesome. Jordan, where can people find you if they wanted to just get with you, pick your brains, talk to you about their issues in the context of what we're talking about right here?
Yeah, I think my email was just flashing below, so they can definitely email me. By all means, if anybody wants my cell phone number, I will put it there. I think there it is.
There it is.
Feel free to call, feel free to text, feel free to email me. We can always set up a time to hop on a call. I'd love to, have the opportunity to help you out, even if there's no cost to talking to me at all. So, feel free to pick my brain, and by all means, if we get along and there's something that you do want or need for yourself or for your family or anybody that you know, always happy to help. And thank you for having me on.
Yeah, I told you we'll go quick. I had a bunch of questions and I know I couldn't get to them, but I know that we'll probably, I'm going to turn this into a blog post and then expand via text. And then I know that I could always grab you and maybe we can do a part 2 and get a little bit more granular on this. But I really appreciate, I know your time is very important. I know that you're a super busy guy. And I really appreciate you taking the time to share your knowledge with us in this very, very important topic, man. Thank you so much for coming.
No, of course. Thank you for having me. And for whoever happens to call, look forward to speaking with you.
All right, man. Thanks. All right. Well, there you have it, guys. Thank you for watching. If you have any comments, any questions, you can reach out to me. You can reach out to Jordan. And, the key message here is plan early. And time is the one thing that we can't get back. All right. So when you plan, there's 2 basic things that you need to do: talk to the right people and pick the right tool in that sequence. Right. Don't go picking tools based on what you hear. Right. Talk to the right people first. or talk to a couple of right people, all right, and make, it's like getting second and third opinions from people that have a track record. And then usually the advice should be pretty much a baseline, and then you choose whoever you want to have a beer with. That's my that's my philosophy pretty much. So thank you. I'll see you next Wednesday, and be safe.